One place though where I'm not sure I'd be taking profits is on this altcoin gem. You know I love this altcoin gem. Look at what Coty is doing. Coty is starting to moon. We've been calling Coty on the show since 3 cents, 2 cents. It's now trading at about 26 cents, and this chart looks like it's about to explode. This may be your last chance to get into this project. Was that your last chance to get into Coty? Well, we did call it on the show last week, and we told you that this thing is going to moon. And what did it do? Coty is going to the moon. And I don't think it's the end for Coty, because here you've got a project with amazing, amazing, amazing fundamentals. You've got real world adoption. You've got tons of real world adoption. You've got an amazing team behind it who just keep delivering and keep delivering and keep delivering. And it doesn't look like this token is going to stop running. Today, we're going to give you a new price target for Coty, and we're going to tell you why. And tomorrow, we've got the founder of Coty, Chasse, coming on to Crypto Banter Live. And tomorrow, we're going to do a full Coty review on the show. We're going to start off in the beginning, explain to you what Coty does, and then work our way up right through to where we are today with new partnerships, exchange listings, and whatever else. Well, that's tomorrow's show. Today, we've got another explosion, and that, of course, is our token of the month. And that, of course, is Fantom. We're going to be doing a deep dive into Fantom. This is a DAG protocol. We've got Chen here today. This is our token of the month, and today we're going to tell you why this is our token of the month. I'm Crypto Man Run, and I come to you each and every day at 10 a.m. EST, and I bring you crypto love and crypto wisdom, and together we are building the most profitable community in the world. Guys, I need to thank you for all you guys are doing for smashing those likes. And so today what we're doing is we're introducing a new competition, a new giveaway. This is how it works. Smash the like, smash the subscribe, and share this, and we will be giving away 100 Coty tokens to random people. All you need to do is comment that you've liked and subscribed and shared, and we're going to give away on the show right now 100 Coty tokens. Fred, let's have a look at the comments and start giving away those 100 Coty tokens. All you got to tell us is that you have smashed the like and that you have shared the video, and if you are a subscriber, you will win those tokens. While you guys are doing that, let's talk about the other explosions that are happening, and let's not exclude Ethereum, because Ethereum probably had its biggest weekend ever in terms of announcements. Not only did Jack Dorsey actually fall in love with Ethereum this weekend without even knowing about it, but we also had some other announcements this weekend which were significant for Ethereum. So let's talk about the first part first. And that is, of course, Jack Dorsey, who is now, without knowing it, actually using Ethereum. And that is because a company called Chen has created a product where you can create an NFT of your own tweet. When you do that, the NFT can't be deleted, and the tweet itself, of course, can be deleted. And you can create something ownable and transferable. And Jack found out about this, and he auctioned off his first tweet. Now, his first tweet was just setting up my Twitter, and the bids on that tweet are somewhere around $2.5 million. In fact, the whole weekend, Justin Sun was bidding against another founder called Sina Estavi. The irony is that Justin Sun's highest bid was $2 million. And Sina Estavi's highest bid is now sitting at $2.5 million. The even bigger irony is that Sina Estavi is a founder of a project which is actually building on the Tron network. So the two of them were bidding against each other this whole weekend for the NFT of Jack's tweets. And today the bid stands at $2.5 million. And that's not the only action, because there were many other tweets that were sold during the weekend. So why am I excited about this? It's certainly not exciting because people are selling tweets, because, yeah, that's cool. The more exciting part is that we're seeing three big things happening in front of our eyes. The first thing is that we're building an internet of value, not an internet of data like the current internet, but an internet of value. And this internet of value is living on Ethereum. And so what it shows is that no matter how much of a Bitcoin maximalist you are, you will eventually use Ethereum, because all the cool stuff is being built on Ethereum. And that's exactly what we saw with Jack. Jack is a self-acclaimed Bitcoin maximalist. In fact, he's against other cryptos. And this weekend, because he wanted to participate in something super cool in the NFT universe, well, he had to use Ethereum. And to use Ethereum, you have to buy Ethereum. The second thing that this shows is that blockchains are being used exactly for what they were meant for. The Bitcoin blockchain was for buying. People are supposed to buy Bitcoin to store value. Ethereum is meant to be used as a utility token on the network. And you can see that's exactly what's happening. Jack is buying Bitcoin to store value and protect his balance sheets. But he's buying Ethereum because he needs to use it to interact with something super cool, like the NFT of your own tweet. And that brings me to my third part, and probably the most exciting part. I've said to you guys many, many times that I think that NFTs are the best things that ever happened to crypto. In fact, I think that NFTs will be the mainstream adoption tool. If we want to get people to use crypto, I think that NFTs are going to be the vehicle. Now, let me tell you why. Some people don't want futuristic money like Bitcoin. Some people don't know enough about the state of the US dollar and other currencies to worry about having to hedge themselves by buying Bitcoin. Some people don't want to know about smart contracts, and they don't want to know about dApps. But everybody wants to own limited edition cool stuff. And that's why I think that NFTs are going to be the vehicle that drives mainstream adoption, and we're seeing it. We saw Jack, a self-acclaimed Bitcoin maximalist. What did he do? Well, he used ETH. That wasn't the end of the big announcements for Ethereum this weekend, because I think the stage is set for a 5-digit Ethereum target by the end of the year, a 5-figure Ethereum target by the end of 2021. Firstly, we had this Jack incident. Now we have another thing, EIP 1559. Now I know that sounds technical, but that is the name for the next Ethereum protocol upgrade. What this protocol upgrade does is it regulates the gas fees, and it makes Ethereum deflationary by burning some Ethereum with every transaction. So it does two things. One is it regulates gas fees, so no more huge fluctuations in gas fees. And the second thing it does is it burns Ethereum with every transaction, and as it burns Ethereum, it makes the Ethereum less Ethereum on the market, and that means the higher the price. So this was approved on a developer call this weekend, and it is being planned to roll out in July this year. What you need to note is that the miners are very much against this. Why are the miners against this? It's obvious. They can't keep hitting us for these high gas fees. But despite this, the community voted to pass this and to implement this in some block somewhere around July, and it's going to happen. And when that happens, then Ethereum gas fees aren't going to fluctuate so much. They're not going to be that expensive. And then what? Then Ethereum starts to work, and people are going to start to buy Ethereum. And speaking of people buying Ethereum, we also had a company listed on the Hong Kong Stock Exchange buying Bitcoin and Ethereum. What they announced, though, was that they're buying $22 million worth of Ethereum and less Bitcoin. The second part that's super exciting about their announcement is exactly what I said earlier. People are buying Bitcoin to hold and Ethereum to use. What they said in their announcement was they said they are buying $22 million worth of Ethereum, $17.9 million worth of Bitcoin, and they cite in the letter, the announcement, that they're buying Ethereum because they are a software company and they will be developing dApps, and they think that they're going to need to use these Ethereums when they develop those dApps. And what they're kind of alluding to is, if you are a company that is getting into this ecosystem and is going to develop dApps or going to be using Ethereum, so think of the banks using DeFi in the future, think of financial services companies who are looking at Ethereum and going, hold on, we may actually use this network. What they're saying is it's probably better to buy the Ethereum now than to wait until everyone starts adopting Ethereum and then to start buying. The second part of this announcement that excites me is that this is one of the first non-US companies that is coming out publicly and saying that they're buying Ethereum. And where is this company domiciled? Hong Kong. And Hong Kong is now kind of like a part of China again. So very exciting developments on Ethereum. And again, I say, it wouldn't surprise me to see a $20,000 ETH by the end of the year, or maybe even a $25,000 ETH by the end of 2021. And of course, if we are going to talk about explosions, we can't ignore the big daddy, and of course, that's Bitcoin, because Bitcoin may also be exploding. And that is, if you look at Peter Brandt posted a tweet, and he says that he thinks that Bitcoin may go to 350,000 by September 2021. Yeah, September this year, he says $350,000. And we're going to be looking at that tweet and the data that drives that tweet. But there's another reason Bitcoin's exploding. And we saw it happening on Saturday as soon as the stimulus was approved. Yep, guys, we're getting another $1.9 trillion in stimulus. It's one of the biggest stimulus checks. Remember, the last stimulus checks was $600. This is a $1,400 stimulus check that has been passed and will be in the market by the end of March or beginning of April. So why is this so exciting? Because not everybody's going to use their stimulus checks to buy Bitcoin. But the last time that we had stimulus checks, Coinbase reported that they had multiple $600 purchases, which kind of shows that the people that aren't using their stimulus because they need to use it, what are they using it for? They're using it to buy stimulus. Fred, let's look at some of the last time charts when we had stimulus. So the first stimulus was passed last year in March. And that's, of course, when the market was at the worst. And you can see that Bitcoin started to climb progressively from that point. Now, let's not attribute that climb to the stimulus. Let's look at the second stimulus. The second stimulus was in January this year. And the amount was a smallish amount. It was about $600 per person. And that's when Coinbase reported that they saw these multiple $600 purchases. Well, immediately after the stimulus, Bitcoin went up by 40%. Now remember that this stimulus is about, it's $1,400 per person. So it's about 2 and a bit times bigger than the last stimulus. And I think that there are way more crypto investors now than there were in January. So we can assume that a lot more of these stimulus payments may come into Bitcoin. Like I said, of course, some people are going to use their stimulus, but others may invest this into Bitcoin. And if that happens, could this set us up for Peter Brandt's target? Fred, let's look at Peter's target, because I think this is where the magic lies. So Peter Brandt made a target of 300K, and he said that this may happen in 2021. In other words, in just a few months, he's saying that Bitcoin may go from where it is right now at 50,000 or 51,000, and it may go to $300,000 or $360,000. And he points this out with his theory around the parabolic moves, and he's saying we are definitely tracking the parabola, as you can see over here. And if we do carry on at this rate, we could go to $300,000 and $360,000. Peter Brandt is no spring chicken. This guy has been charting his whole life. And he doesn't really care what he charts. I've met him many times, and we're trying to get him on the show to chart for you guys. But let me tell you, Peter doesn't care what he's charting. He looks at the chart, whether it is maize, gold, silver. For him, a chart is a chart. And this is what he said in his tweet. Fred, maybe let's call up the tweet and show the guys the actual tweet. He says, full disclosure, I'm not a Bitcoin maximalist. I've been in trading, in my 46 years of trading, I've never seen a more exciting market with a similar narrative. My largest current single non-real estate holding is Bitcoin. Yet for me, Bitcoin is just another market to be traded, like T-bills, like notes, like beans, like sugar. This guy's an absolute chartist, and when I get him on the show, you'll see exactly what I mean, but he doesn't care what he charts. And he's saying that this chart is going up to $300,000 by the end of 2021, or even before the end of 2021. So you combine the stimulus checks, and we saw that as soon as there was talk that the stimulus was approved, the Bitcoin price shot up over the weekend. Combine that with Peter's target, and I think we're set for a massive, massive price jump on Bitcoin. But there is one warning. I always bring up this warning. I know I'm a party pooper, but I always bring up this warning slide, and that is that the most important chart in crypto, it is the US Treasury yield chart. We've spoken about this chart many, many times on the show. This is the rate at which the US government borrows money. This chart is going to an all-time high. And as this chart goes to an all-time high, it's taking down the stock market with it. And I did some homework today on the correlation between Bitcoin and the S&P 500. Fred, call up that tweet. Let's have a look at it. There's a tweet that shows that Bitcoin and the S&P 500 are very, very, very highly correlated. What does that mean? Well, let me call it up for you guys. That's the tweet. And you can see the guy says up until 2 a.m. CET, Bitcoin hit the daily high at 51,800, same for the S&P 500 futures. Since then, both have dropped. This is my concern, guys, that if the US Treasury yield rate goes up, investors are incentivized to put more money into the risk-free asset, which is the US government bond, and less money into risky assets. And when that happens, the stock market may come down, and if the stock market goes down, well, then Bitcoin may go down with it. So those are my concerns. Let's talk about some other successes. In fact, no, let's give away some Coty. Okay, so we've got Motley Crypto. You've got yourself 100 Coty. If you're a subscriber, you've got to be a subscriber. So you've got to have liked, and you've got to be a subscriber. Fred, should we give away some more? All right, Freddie says, let's give away some more. Let's give away some more. You know what? Let's talk about Friday's giveaway. Remember on Friday, we ran a competition, and we said that if you like, subscribe, and comment, well, then you can win backstage passes to our Friday banter session with all our Friday banter big boys. Well, we've got our first winner. Our first winner is Kaylee McCall. You have won yourself a backstage pass to the Crypto Banter show on Friday with all the big boys and all the big girls. We may even get you some ladies, or you may be the only lady out there. But you've won that, guys. We're going to be giving away these things all week. And if you like, subscribe, and share, then you may win yourself some Cody. On another note, did you guys see the launch of BSC Tools? I told you guys I was super excited about BSC Tools, and we reviewed it on the show last week. It's the DEX tools for the BSC chain. I'm sure you guys remember. Well, the public sell price of that was 40 cents. Fred, call up that chart again. So if you look at the price now is around $15. So if you would have followed Crypto Banter and you managed to get some in the launch pad, you could have made yourself an amazing return. And we're going to keep following that project, because I think that project, the BSC Tools project, is one of the most fundamental projects in the entire BSC ecosystem, and it's something that's been lacking for a long time. So let's get on with the show. If you're new and you are enjoying the content, well, welcome to Crypto Banter. If you like the content, give us a like. But now I want to talk to you about something that has been on my mind the whole weekend. In fact, I was so angry this weekend. Guys, it's important that we align on how this show works and how this market works. And the reason why I say that is because after the paid hack on Friday, people started pointing fingers at Crypto Banter and started saying, how can you have Kyle on the show? Look what happened. I received tweets, I received emails, I received messages saying we should have done more due diligence before we get people on the show and before we shield paid network right here on our show. So I want to make sure that we're aligned about this market and about what this show is all about. First of all, you need to understand that by investing in crypto, and specifically investing in altcoins, and specifically investing in new altcoins, you are investing in the riskiest asset class in the world. You may make 150x return, but you are investing in the most risky asset class in the entire world at the moment. Projects may fail because the founders don't deliver, because the founders are scammed, because the founders are scammers, because of rug pulls, because of hacks, because they're badly run. All this can happen. And that's why we get the high returns, because we're willing to take the high risk. Now, here at Banter, we've got a full research team. Rest assured that before we get someone onto our show, we do our own research. And we get them on the show after we've done the research and after we've spoken to them and after we've asked all the right questions. But even with that, even after we've done our research, some founders will be scammers. Some will get hacked. Some will get rug pulled. Some will run their projects into the ground, and some may never ever deliver what they promised. In fact, a lot of them, most of these coins, probably won't be alive in 5 years' time. And so that's why you have to do your own research. You have to put on your big boy pants. After we show you the project, you have to do your own research, and you have to take accountability for the investment decisions that you've made. I can assure you that any project that you see here on Banter, we will never ever accept payment from anyone to be on our channel. We may invest in some projects, And we tell you that we've invested in projects. We have a call page on our Banter Calls website. We also tell you on the show, we tell you that, that we've invested. So we try and give you guys as much transparency as possible. But guys, you have to wear your big boy pants and you have to be responsible for your own investment decisions. We can't help you with that. So now that that's off my chest, let's look at the big story of what happened to Paid Network on Friday. Now, you'll remember, Carl was on our show on Friday and he was casually having a banter with us. And he lives in Thailand. And much later that night, something happened. A hacker, or as far as we know, a hacker minted about hacked the contract and minted about 59 million paid tokens and started to sell them. And Fred, you can call up the Etherscan. Let's look at that Etherscan. That's what it looked like. There were just sales and sales and sales of paid tokens, and they were sold to none other than people trading on Uniswap. So that is what we know. Immediately, as far as I know, Carl responded to the community and said, I'm doing all I can and I'll be in contact. And the whole weekend, Carl and the paid team were in contact with the community, sorting out the problem. Guys, some of you WhatsApped me or messaged me and said, is this a scam? The hacker, as far as I know, netted about $3 million from this malicious activity. You guys have seen Carl. You've seen how big Paid Network is. You've seen how much work he's put in. Do you think that he'd pull a scam for $3 million and destroy everything that he's built in Paid Network? I don't think so. But let's get Carl on the line and let's ask him directly. And if you do have any questions for Carl, drop them in the comments. Drop them in the comments so we can ask Carl all these questions. Carl, welcome back, my friend.
Hey, Ren. Thanks for having me.
Amazing to see you again. I know it's been an absolutely tough weekend. How are you guys doing, first of all?
We're doing all right. It's been a long weekend. It hasn't stopped. We like you said, after your show on Friday, I went to go lay down, and it was about 1 o'clock in the morning, 1:15. I was closing my eyes when all of a sudden I had a knocking on my door, like we were being robbed or something. And one of my team came up, running up the stairs, and I just had like a look like he had seen a ghost, basically, and just said, I said, what's going on? He said, someone is just minted and sold 59 million, or like minted 59 million tokens and dumping it on the market. And my heart just totally sank, and I just, at that moment, I couldn't believe what was going on. Like, you hear it, other projects, but yeah, man.
Okay, so it happens. You realize what's going on because you see the transactions on Etherscan. Talk me through what happens immediately after that.
So we went downstairs and just tried to, some of my team had already been 10 minutes into it. We had our devs on the phone. We had market makers on the phone, Certic, and also called up some friends that do analysis and things like this to try to understand what was going on. And we started breaking it down. We assembled a war room. We got in contact. Luckily, we have I've been in the space a very long time and have a lot of friends that just reached out immediately, willing to help. And really, the first step was just trying to understand what is going on and how did this happen. Needless to say, like, we didn't sleep that night, and we just tried to go straight to how do we fix this? What do we do?
Okay, so you run this, you get this, and as I recall, the first thing you did was let the community know that you're working on this. I think you handled this incredibly well, and I must say, I compare the way that you handled this to the way that CZ handled his hack. And I think that shows the difference between a good leader and a bad leader. Because some people run away from the communities while they're fixing the problem. You were transparent. You posted a video. You posted tweets. You communicated with the community right through it, either via the Telegram group or the Twitter group or these videos that you were making. And you told them exactly what you were doing. And I think you even gave them the assurance that everyone would be made whole.
Yeah, I mean, that's the most important thing in a hack, right? I mean, you just want to make sure that people don't get hurt, and that's obviously, we made sure of, once we knew like how we could move forward, we wanted to make sure that that we took the responsibility for what happened. It's no one else's fault but our own, and we just wanted to make sure that anybody that might have suffered losses were made whole, and I want to make that clear to people from the very beginning.
Okay, so what do you mean by made whole? As far as I understand, what you're going to do is you're going to take a snapshot of the ledger before the hack and basically reissue people their tokens, especially those that sold to the hacker or bought from the hacker. So those people will be made whole. How else will you make people whole?
So there, this is one of the things right now. Our contract, by the way, is V2 is pretty much ready to go. But one of the things that's been holding us up right now is trying to analyze all the data that we have. And it's not as easy as just taking a snapshot at the moment before the hack and airdropping those tokens back to the wallet holders. You have a lot of other considerations, like the tokens that were being staked in Unifarm and Launchpool, for example, the tokens that were in Gate.io, for example. These things are not easily seen on blockchain. Another thing is liquidity providers in Uniswap. If it was as easy as just dropping to people right before the hack, we would have had things up and running again already. But there's a lot to take into consideration, especially when you're trying to, see who is trading. People traded after the dump. Either people panic sold or they were trying to buy the dip, and so we have to try to figure out, assess the damage and figure out how do we compensate these people who, were, especially people that were buying paid because they thought they were buying a dip.
So are you going to compensate the people that bought the dip? In other words, even after you issued the announcement and told people not to buy paid and to pull their liquidity, you're going to still make those people whole?
For up to an hour after I made the announcement. So, yeah, so obviously not until today, but we made the announcement. It gave it time to propagate through crypto Twitter and our Telegram announcement channel, things like that. We share it with our influencers. We share it with our network. I think that tweet that I put out had something like 700,000 impressions. It was well propagated quite quickly, and I try, and yeah, so that's what we plan on doing about 1 hour after the announcement. So it's about 3.5 hours after the attack.
Okay, so I think we understand what you guys are doing, and I must say I commend you because I think you're going over and above. You don't need to make people that try to buy the dip and weren't informed, and I think what you're doing is highly, highly, highly commendable. But I do want to take you back one step. So if I understand correctly, what happened was the hacker got control of the admin contract, and there was a function in the admin contract that allowed the admin to mint more tokens, right? And then that's exactly what he did, right?
That's not exactly correct. There was this, so after we initially deployed our contract, which is a proxy upgrade contract, and we are sticking with that moving forward. People think that that's a vulnerable type of contract. And I want to make things clear here that the vulnerability was never in our contract. It was, poor key management, and the mnemonic ended up on GitHub, and that's how this whole exploit happened. And for those of you who don't know, a proxy upgrade contract is kind of how we envision all smart contracts moving forward. Gavin Wood, who wrote Solidity, or coded Solidity, basically, CTO of Ethereum, decided to make Polkadot the standard of upgradable proxy contracts. So we think that's the direction that people should move in. But yeah, so what happened is the attacker gained access to the admin contract and realized that he couldn't mint new tokens, and there was no paid tokens on the wallet that he attained. But he did realize that it was an upgradable contract. So once he had taken ownership of it, he was able to mint a new contract with the mint function turned on. So he turned it on after creating a new contract. and then tried to mint new tokens, but he couldn't because the total supply was capped. And you can't print new tokens because they were already minted. So he had to burn tokens first in order to then mint new tokens to his wallet. Then he did, and then he started dumping on Uniswap.
Okay, so that sounds amazing. I want to show you this tweet. And this tweet, I'm sure you've seen it. It went around a long time. And this is from the scam advisory people on Twitter. They're called War on Rags. And they said that they issued a scam advisory warning. And they said the reason is the owner can mint tokens and did mint tokens to fresh wallets who never bought the pre-sale. It's almost like they were warning that something similar could happen. How do you guys respond to this?
Yeah, we did. Is this the one that was on January? Yeah, January 25th. Yeah.
Yes.
So we responded to it right away. And that did bring to our attention the mint function, turned on, and that's what we went in and removed permanent. And so we came in with a full transparency report after the fact, showing that we removed the mint function. This is all in a report on our Medium, full transparency. It shows Etherscan addresses, links to everything, and so we did address that head on. And so now people are drawing conclusions that just looking at that without looking at evidence. But you can see our transparency report that we did remove the mint function.
All right, Kyle, any learnings from this? What do you learn? What do you take with you? What do you want to tell other founders? Because there are a lot of founders that are watching this. What do you take away from this?
There's a lot, right. So I'm not a developer, obviously. And you really have to go and learn.
We are losing Kyle. Hopefully we are going to get him back, because I think this is the most important part.
And
Ooh,
can you hear me?
We are losing you. Yeah, we can hear you now. Let's try that again. So yeah, we can hear you now. What do you take away from this?
Yeah, so definitely, one of the things that we're implementing a lot of new things from this, a big learning experience. Best security practices. We are working with a lot of best cybersecurity, Blade, and some other security companies to like Immunify and things like that to help us make sure that we're using the best practices. For the new V2 token contract, we're using Gnosis Safe for multi-sig wallet. And basically, you really need to work with professionals as a founder to make sure that you cover your tracks, or like not cover your tracks, but like check cross your T's and your I's, and so we are implementing all of the best security practices moving forward.
All right. Wow. Sounds like a stressful weekend. Kyle, I know that you are tenacious as hell. I know that you've put your life into this. I know that this is the culmination of all your many years in crypto. How much damage do you think this has done to Paid Network? I mean, Paid Network was one of the hottest projects out there. Your Launchpad Ignition was one of the best launchpads out there. Everything you touch turned to gold. What happens next? Do you think that this has affected the project?
Yeah, it's affected the project, obviously. But I think the fact that, end of the day, nobody will lose any monetary value from this says a lot. You mentioned CZ earlier, and I think whether you think he's a good leader or not, that's not the point. But I know that when the Binance hack happened and they refunded everybody's money, it restored a lot of faith. And doing something like that, ensures your customers that that the founder means well and they really value their customers. And we really value our customers, and we don't want to lose trust from any one of you. And so so I think that we will recover from this. We're here. People like we're here. I'm here today talking to you, answering questions. I'm not hiding anywhere. Our fundamentals are strong. Our team is strong. We still have a bunch of IDOs lined up. We're still building one of the most disruptful and important, decentralized systems that I can imagine that the world really needs, I think that we will rise quickly and move forward stronger than ever.
Yeah, someone just asked in the comments, what will happen to the people that suffered impermanent loss on Uniswap? Because there was obviously, when the two tokens were at a certain level, if the one token drops and you withdrew your liquidity, you suffer an impermanent loss. We'll get into that in another show. But someone just asked, what happens to the people that have an impermanent loss?
Yeah, it's a great question. We are working with Parsec right now. Like I said, one of the things that we are trying to analyze is these kind of questions. I don't have the answer for you, but I know Parsec has been through this before. And literally, my team is on the phone with them right now.
All right, Kyle, I want to just get the slate clean. There are a lot of YouTubers that get paid to promote projects. Have you ever been paid to be on my show? Have you ever paid me anything? Was I an investor in Paid Network? Have I ever, as far as you know, have I ever invested in Paid Network? Was I part of your pre-sale? Put it out there. If I was, tell the truth. Like if I was on your pre-sale, let them know. If you've ever paid me to be on my show, let the people know, because a lot of people think that the YouTubers are paid to shill. And that's why Kyle comes onto Crypto Banter, because he pays Run, or he gave Run paid tokens. Have you ever given me a single paid token?
No, and in fact, I just remember you saying that you wish that you would have an investor had paid at the time. At the time, so no, Rand, definitely not. And to also set the record straight, we have an amazing community, and a lot of our community is influencers. But to set the record straight, none of them have been paid. Ivan is the only one that's an advisor for us, and he does advise a lot with DeFi protocols, with different things. He's helped us with this, but nobody has been paid anything for supporting us.
All right, Kyle, I'm going to let you go because I know you guys are working on the upgrade. I know it's late, but I want to say that on my side, I think you handled this like a true leader. Your communication was amazing. Your commitment to the community, the way that you rallied the community to help you guys was absolutely admirable. And the fact that you took upon yourself, and you're a pretty wealthy guy, to make people whole was for me the cherry on the top. So you've got my support. You've got my community, I hope. The community, I have been commenting about it. We're going to keep publishing upgrades, and you've got a voice on Crypto Banter. So if you need to talk to the community, you've got a voice here on Crypto Banter. And the best thing is you don't have to pay for it, because we don't accept any payment for token reviews.
Thank you, Ren. Appreciate your help, and thank you for you and your audience for having me. Thank you for listening to me, everybody. I really appreciate your time, and I'll make it back to work.
All right, thank you very much, Kyle. That is Kyle, and guys, I don't know, say what you want. And maybe he could have done better in protecting the smart contract, and maybe, but to me, how he's handling this, he's handling it like a true leader. And we need more Kyles around, in my opinion. And again, I don't even hold paid tokens. In fact, to be honest, I've never held paid tokens. I've always waited for the proverbial dip to buy them. And hey, maybe this is my chance to buy paid slightly cheaper. Let's wait for paid version 2 contracts. Alrighty, should we give away some more Coty? What do you think, Fred? And then we're going to get to our token of the month review, guys. Our token of the month for the month of March was Fantom. But I think I want to give away some more Coty tokens. So if you want Coty tokens, remember, you've got to be a subscriber. For the month of March was Fantom. You've got to be a subscriber, and you've got to have smashed the like, and you've got to have shared the video and tell us that you've done that. And I'm going to pick a comment. Let me pick a comment. Let me find some comments. All right. Crypto X. If you are a subscriber to our channel and you've smashed the like button, you have got yourself 100 Coty. So let us know if you have done that. Ping us on our Telegram group or get hold of us here on the YouTube comments. Fred, what do you say we get on with the show and bring back our token of the month? And that is, of course, Fantom. Fantom has been one of those like under the radar projects. This is a project that's been around since 2018. I think they raised money in June 2018. And what Fantom is it's essentially a cyclic graph, or a directed acyclic graph, which is kind of like a blockchain. It fulfills the same functionality as a blockchain, but technically it's not a blockchain. Some other examples of these acyclic graphs or DAG protocols are COTI and IOTA. And what they do is they allow people to confirm transactions, but they do it in a different way than blockchains do it. And for this video, I'm not going to talk to you about exactly how they do it. Maybe Michael Chen will take that on now when he comes on. So COTI aims to solve the problems of current blockchains. And the problems of current blockchains are scalability, security, and decentralization. And I remember in 2018 when COTI were raising money, in fact, I was an advisor to the project in 2018, Andre Crenier was one of the lead developers on this project. And if you don't know who Andre Crenier is, well, he is the developer of UN Finance, and he's making big waves in the DeFi space. So today, I've got none other than Michael Chen. I know you guys love Michael. Michael, welcome back to Crypto Banter, man.
International man of mystery, Ron Neuer. Thank you for having me here, man. Like always.
Yeah, and this time, you're not shilling other projects. This time, it's actually like Fantom, which is your own project.
I'd say this time you're letting me do something that I'm comfortable with. So yeah, I mean, whenever it comes to, well, shilling Fantom, I guess I don't get pitchforked by my own community. So pleasure to be here. And seriously, thank you for giving us a venue to speak out about Fantom, right?
All right, so the quick history. History is in 2018, around June, you guys raised quite a bit of cash. I don't remember the exact amount. It was over 20 million and maybe even over 30 million. And you set out to solve the problems in current blockchain, which were scalability, security, and decentralization. And fast forward 3 years later, where are we?
Well, if you look at what it was back then, right? I didn't like the marketing for it, right? Lots of buzzwords, lots of loud, big promises, right? But what I did find very cool about Fantom from the very beginning was the consensus that they were building, right? And you mentioned DAGs, right? Which is something people often kind of confuse with asynchronous BFT, right? Because DAG is just the structure. It means that it's directed, so it goes into one direction, acyclic, it does not go back, and it's a graph. So in that same way, Bitcoin and Ethereum and Merkle trees are DAGs. But what is kind of exciting about an IOTA or a Fantom or AVAX or any of that is asynchronous BFT. So Byzantine fault-tolerant protocols already exist. You've got Cosmos Tendermint, you got Istanbul BFT, and those consensus mechanisms work really well. They're really, really fast at propagating information across a network. And just not to get too technical too quickly, right? The asynchronous variant of those BFT networks, think of Avalanche consensus, think of Lachesis, think of Hashgraph Swirls, in the way it differs from synchronous networks. Because imagine if you are doing something, sending money from A to B, and say there's 100 nodes in the network, and you're in a synchronous system, and you have to go to all of them to explain that this has happened, then it's going to take quite a while. And you're depending on the slowest 1/3 of the network as your bottleneck to get time to finality. Whereas with an asynchronous network, you usually use a form of gossip. And basically what it does is I tell my neighbors, I tell A and B, that I've made this transaction. My neighbors tell their neighbors tell their neighbors. And essentially you propagate information across a network really, really fast. Because a piece of gossip, just them knowing that this transaction has happened and not what that transaction contains is super lightweight, right? And allows you to get to finality much quicker. So that's kind of what ABFT is. That's where we started. And that's also to clear up DAG, ABFT, and all those terms there. And, you know, when we started out in 2018, I think you mentioned before... Sorry, Siri. The Fantom guys raised quite a bit of cash, right? Back then, that was raised in ETH. I think they claimed it was $40 million at the time. But even when the race ended, that wasn't even $40 million anymore. Because, you know, ETH went down in value, right? So pretty tough bear market there. But that never stopped us from building what we wanted to build. We saw the potential in ABFT consensus. But a blockchain is more than just consensus, right? Usually there's two layers that people interact with. First of all, consensus is the networking and security layer. And then there's the middleware, the part that people interact with, the part that people deploy code on, where you deploy smart contracts, right? And in Ethereum, that is the Ethereum virtual machine. And if you're using Solidity or Viper to deploy an app, that is what you interact with. And we said, hey, you know, we can reinvent the wheel. We can deploy a new VM, make something really cool. But why, right? Because it already took so many years for people to start getting used to the EVM and for developers to deploy there. And unlike popular opinion, developers can be very lazy, right? They're not going to relearn, right? So if you're using Rust for smart contract language or JavaScript, they're going to be like, fuck that shit, right? Sorry for swearing, excuse my French. They want solidity. So we said, okay, we've got this unique thing. We're just going to hook it up to the EVM because that way we maximize that compatibility. So fast forward to 2019, December, that mainnet, that consensus was finished, deployed, and to a level where it's acceptable to be on mainnet, hooked up to the EVM, and has been running pretty steadily with some minor hiccups since till now.
So, okay, we've got a lot of viewers here who are not technical, but summarize that for me in non-technical speak. What you're saying is that Fantom has very, very, very high throughput, and that you can use the same programming language as you use as Ethereum because you're actually putting it through the Ethereum virtual machine. Is that right?
And basically what you can think of, right? It's a layer 1 network with its own nodes that are securing it. But the way the architecture is structured, it's not much different from a layer 2 because you can deploy that same code. You can deploy those same tools and that same key infrastructure you're used to having on Ethereum. So you add a custom network on MetaMask, and you're ready to play.
Okay, how fast, how many transactions can you do? Because the problem that you set out to solve at the time was you said, look, there's decentralization, which is a problem. There's scalability, there's transaction throughput. If you take Fantom today in its current form, how many transactions can you guys put through if you were to measure it like that?
So you can give a simple number, but there's a lot of parameters involved, right? So you could say a couple thousand, tens of thousands transactions are possible, but obviously that tapers down as you add more nodes, because as you add more nodes, there's more nodes that need to receive that information that you need to be gossiped to. So that introduces latency. Then there's geographical distribution, different clusters of servers and everything that could slow it down and reduce the throughput. But at the very least, right now, if you're looking at throughput, I don't think that's a very exciting statistic. I think it's time to finality. So when you press a button, send a transaction, when is it confirmed? In this case, a couple of weeks ago, we were still at 1 or 2 seconds. Now we're at 5 seconds, I think. It's really, really freaking fast. Like it actually feels like it's actually good UX. Like you feel like things confirm as you click.
So it's working, and it's working very fast. And you guys have launched recently a full Fantom DeFi suite. Tell me about the DeFi suite that you guys have launched.
So the DeFi suite, I want to kind of elaborate on. Thanks for asking that question, right? So that is something that came from 2020 when we went all in on DeFi. We said, okay, there's so many cool Lego blocks on Ethereum. We should fork them. We should build them out and have all of that on our own. But as of recently, that's changed because as we were forking things, a lot of other teams said, hey, don't fork. We'll just deploy our version on yours. We'll maintain it ourselves. And we were like, wow, that's awesome. So we don't have to do the maintenance on that. And we just have to maintain the bedrock infrastructure, which is the chain. So Fantom Finance started out with FMint, FTrade, and FLend. And FMint being like a maker DAO, where you can mint a collateralized stablecoin using FTM or other crypto assets as collateral. Then there was FTrade, which was going to be a single-sided automated market maker DEX. But first of all, started out with FUni, which was an implementation of Uniswap on Fantom, and F was an implementation of Aave. Now, fast forward to today, we have SushiSwap deployed on Fantom. We have Cream, we have Curve, we have some of the premier pioneering like DeFi protocols with Ethereum deployed on Fantom as well. So why should we be building out the DeFi stack when there's these professionals who live and breathe DeFi building on us? I mean, I think it would be disrespectful to them, for us non-DeFi professionals, although I'm a DeFi maximalist, to build that and compete with them.
So generally, when these protocols build on a protocol, on another protocol, it means that they are coming here because they think people are going to adopt Fantom. Is there like adoption of Fantom today? What's driving the adoption of Fantom today? It all sounds good from a technological point of view. I know it's fast. I know transaction fees are less than a penny. I know we've got all these big integrations happening, but is anybody actually using it?
So if you're talking about users, right, a lot of people quantify users by saying people who download a wallet, make a wallet, put some FTM in there and interact, right? That's maybe the users that these applications who are building are targeting. Our users who we are targeting are other developers, right? If you look at DeFi primitives on Ethereum, they say our users are not the people depositing. It is the other smart contracts that interact with our smart contracts. In that same fashion, Fantom's users are the people deploying protocols on top of Fantom. And if I may say, I think we have a lot of users. I think we have a lot of developers who are looking at it, and more importantly, who don't need me to shill it, but are telling each other, hey, deploy here as well. And I think that's awesome. We're talking about dozens of teams.
All right, tell me more about what's happening. Tell me more about what we can expect in the next few quarters of 2021. You guys have certainly had a big start to the year, lots of announcements. There was a Binance listing, which I think pumped the price. In fact, let's look at what happened to the price on that Binance listing. Fred, have you got all the info? I wonder if Fred has the price to show us, the chart. But there was a massive pump. Oh, here it is. I can see it. There it is. That's the pump. You can see the peak of that pump was just after the Binance listing. What else can we expect?
Just to say, we actually got listed on Binance in 2019 already. It was just a mainnet integration. So people could use the mainnet tokens instead of the RC20s. I mean, obviously some news. I mean, I guess it would be good to note. We had Alameda Research buy a $35 million FTM stake in tokens to take part in the network. Block Tower acquired a $20 million stake into the network as well. So we were very humbled by that sign.
Did they buy on the open market? Did Sam Bankman-Fried and Alameda Research, did they buy these tokens on the open market, or did they buy them from the foundation through some kind of treasury?
So it's a mix. So obviously a lot of them, we facilitated some deals by speaking to other holders to get them from Alameda to them, right? Because we as a foundation do not hold 70 or 80% of the supply, much less, I think. Yeah. Less than 10% even, right? So we had to find those tokens elsewhere. They did not buy them on the open market in the sense that they just went to an exchange and bought them from an order book. I mean, no institution does that, but we did help them facilitate with other market participants.
What is Alameda Research looking for in Fantom? I mean, you can see that when Sam Bankman buys something, it's usually one of the pieces to his puzzle. You know, he's a big Serum fan, and then he's a big Solana fan, and the two like hold hands. So what is he looking for here? Any idea of strategically why he's putting so much money into one project?
Well, to be honest with you, I haven't spoken to the man himself, the big daddy, SBF, right? Like, I haven't personally spoken to him. But what I could imagine the reason would have been is, of course, that we believe in the cross-chain future, right? We've been building out cross-chain bridges together with our partners at AnySwap and Multichain. And we are supporting Solana, we are supporting Ethereum, BSC, because at the end of the day, assets should flow freely, right? And I think the guys at Alameda see that as well, and they're not too tribalistic about it, right? I don't ever feel like they're like, oh, Solana should be the one chain for everything. The guys understand that crypto is bigger than 1, 2, 3, or 4 chains.
But I mean, that's a huge investment for him to buy $35 million worth of token. I mean, that's heavy. That's big. I mean,
look, I can't look into their wallets, right? I don't know how much they have. I don't know how big that is for them, but I'd say, objectively speaking, for us, it is a big number.
All right, what's the biggest thing on the roadmap for the next year, for the remainder of 2021?
Like getting FTM as an environment as close as possible to people developing on Ethereum, right? Because right now there's so much friction. If you're porting to an XDAI or POA or a Matic or whatsoever, you got to find out which node hosting service you can get, like a Degraph or an Infura. You got to find out what their Explorer is, whether they can do verified contracts as a developer. We've been working on getting that like to a carbon copy level. Like, we got Everscan deployed, we've got the graphs hosted services, working on a few node providers as well. Getting that to like the A game would be the biggest thing for us, for me, this quarter. But I think for a lot of the audience, that's maybe not as exciting. So I would say it would be the dozens of teams deploying their applications on top of Fantom. And you'll be hearing about them, and you'll be seeing that in production.
All right, Michael, that's all we have time for. So thank you so much. You guys are our token of the month. So we are going to keep checking in with you during the month of March. Tell you guys what the community are asking. If the community do have questions, what's the best place to go? Is there a Fantom community Telegram group? Where's the best place to get information?
We've got a Telegram, we've got a Discord, we've got Twitter, man. Spam us anywhere. I'll be here to answer. Like more than happy to.
All righty, my friend. We'll see you soon. Thank you very much.
Thank you as well, man.
All right, that's Fantom. That's our token of the month. And I think we should get another token of the month. Fred, what do you say we add a second token of the month? Fred says yes. Sure. All right, so The second token of the month is, of course, Coty. We love Coty. We've been big Coty fans. And tomorrow, we have got Shachaf Bagevan, and he's coming here live. And we're going to do a full review of Coty. Full review. But more importantly, we're going to be doing Coty giveaways, and he's promised to drop some nuggets here. So if you are a big Coty fan, guys, be here tomorrow. I'm Crypto Man Run, checking out for today. I'll see you again tomorrow. Same time, same place, right here at 10 a.m. EST every single day of the week. I'll see you again. And if you are trading, my friends, trade well. It's a rough market out there. It's fun, but be careful. I'll see you again tomorrow at 10 a.m. EST. Crypto Man Run, signing out.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their own research.